in COVID lockdown. They want to have a great Christmas holiday season. But my guess is early in 2023, you start to see the cracks emerge. And I think the Fed's going to have to put hold back. I think maybe one more rate hike in early 2023, and then they're going to have to go to this more of a pause and wait and see attitude. That's kind of where I'm leaning. I think you get one more rate hike in early 2023, and then the Fed goes to the sidelines. I don't think they cut rates, and I think they're going to be very, very cautious on cutting rates, just like I think they overloaded the hikes too much here to kind of overcompensate for saying it was transitory. Oh, we're not going to have lasting inflation. They were proven wrong. They kind of had this emotional response of, oh my goodness, we have to play catch up now. I think on the other side, you have from the 70s and 80s where inflation, you saw inflation and then you saw kind of rates come to a pause or even start to be lowered, and then inflation came roaring back. And so I think the Fed has said that, and Jerome Powell has talked about that and how he doesn't want to repeat those issues. So I think that the Fed is going to stick with the current rate for quite a while until absolutely the economy breaks, and then they will react and probably be behind the curve once again. So there's no doubt that Bitcoin is still struggling. And I think the biggest example of how Bitcoin is struggling right now is you obviously saw the collapse on the back of FTX. And then since then, the stock market until really the last week or so had been trending neutral to higher. And we didn't see that in the Bitcoin chart. Even though the Bitcoin chart usually follows risk assets like the stock market, we weren't seeing that. And that makes a lot of sense. Investors are nervous. They don't know what to believe, what not to believe in the crypto markets these days after FTX really threw a big curveball. And so I think for me, it's continuing to recognize the chart that we're in a downtrend. You can clearly see that, again, this is now another bearish pattern developing, and we probably have further downside. Again, I think we'll stop around, there'll be a big level around 12 to 13,000, but it wouldn't shock me to see us go down to 9,000 on the charts at this point. So I continue to be bearish in early 2023. I will say this, is that I expect Bitcoin to put in a bottom probably around mid-year, probably around $9,000. And I think finally it will coordinate with the next kind of bounce, although the bull market will take years to develop. So I think for the most part, it is lockstep. I mean, not to the exact penny, obviously. We do see generally Ethereum behave slightly different. I think the positive thing for Ethereum is that you have the low going back to June over here, and we have yet to take that low out versus what you've seen on Bitcoin. So you could argue that Ethereum is behaving a little bit stronger. But for me, everything comes back to if Bitcoin's going to go down to 12 or 9,000, it's hard to imagine a scenario where at least Ethereum doesn't decline somewhat, right? I mean, you got to figure that they're somewhat correlated. Having said that, I also think that investors should be welcoming and encouraging the regulation. We need to get this regulation. If you want to bottom in Bitcoin, if you want these assets to start to trade up, you have to get clarity in the sector. You have to know what these exchanges are doing with your assets that you're putting on the exchanges, and obviously, that there's no shenanigans going on, and no big money is going to come in this sector at this stage. I mean, that's the biggest negative here, is that to attract new big money is almost impossible now that FTX blew up. Absolutely. So I'll bring it up here. Right now I have Cardano, but we'll bring up Matic first. And Matic, again, has the positive to this chart is that you're well off of the lows from earlier in 2022. So there's not many coins that you can look at that are up still over 100% off of their lows in 2022. Having said that, what's a little concerning, you have this upsloping white trend line that is now it's trying to break to the downside. If it does, you have 70% support and then finally down to about 61 cent support. But again, the hope if you're a bull is you want to see price get back above this white trend line and hold there. And you can see that every time you hit this line, you are getting a bounce off of it. So again, it tells us that it's a significant level. For me, it's just watching that trend line. So right now we are a tad below, but we haven't confirmed the move yet. So for me, it would just be watching. If it confirms, then you have to have a slight negative bias, at least until about 70 cents. Now, listen, it's at 78 cents, so it's not that far of a move. But in the short term, any sort of confirmation below this trend line, which is around 79, 80 cents, that would be problematic in the near term for Matic. So, I mean, for me, the biggest thing with stable coins is the digital dollar, if the Fed goes ahead with that, right? And to me, that's a big concern. It's one of the reasons why I shy away from holding Tether or USDC is because of that aspect of what does it mean when the government creates essentially its own stable coin and processes, these transactions can be processed just the same. So I think for me, that is the biggest concern. And for me, it's saying, okay, we were talking about Ethereum, how it might have a leg down. And by the way, I agree with that. If the Ripple determination does not come out in the form that is good for Ripple, it would probably translate to all the altcoins in terms of them being classified as securities, right? So that would signal that you could see that leg down in Ethereum and some of the other altcoins. Going back to stable coins, for me, again, it's a big concern of mine. We know that the US dollar, digital dollar, is coming, and I don't know how or what the regulatory impact will be on these stable coins. Things that I've thought about, and you're right, the grayscale situation is really a very important factor for Bitcoin. I think they're the biggest holder of Bitcoin.
Yes.
So if they went into bankruptcy, if they don't get the ability to switch it into an ETF and therefore are forced into this path, you would see a major dip. And it's one of those scenarios where for me, I'd probably put out a buy order and go to sleep on Bitcoin at like $3,000. I mean, it could be one of those scenarios where you see something like that occur.
Yeah.
The crazy thing about it is that if the government really wanted to get rid or really put roadblocks in crypto or in Bitcoin specifically, this would be one way they could do it. They could deny the grayscale conversion to an ETF. And by doing that, you're going to create some very hazardous periods. And again, remember, crypto's already like a wounded animal, right? I mean, it's already gotten some wounds. It's struggling. FTX didn't do us any favors here. If you wanted to put that nail in the coffin, that would be one way to do it. Let's hope that's not their intention. So I think the whales do start nibbling. I think the key is to see some sort of framework. In fact, and again, I'm no whale by any stretch, but I have a small investment of my overall net worth in Bitcoin, a tiny bit in Ethereum as well. And the reason why I'm not ready to go in more right now is I want to know that we have some regulatory framework coming. And I think as soon as we get a hint of it, remember, the market and whales aren't going to wait for it to pass. They're not going to wait for it to become law. It's going to be the framework that we look at and we can say, okay, this is what's going to most likely come to fruition, and then we're going to start to buy and accumulate. And that's really what I'm waiting for. But I think it does happen in 2023. I really liken the Lehman Brothers collapse in 2008 to what happened with FTX in terms of each industry. From the ruins, we saw Dodd-Frank emerge in the banking markets. I think something like that will come across. And I also think you can look at the Lehman Brothers collapse and say, okay, how long did it take for investors to psychologically flush down before a bottom was made in the S&P 500? And that was about 5 to 6 months. In addition, the S&P dropped about 45%. So if you look at when FTX occurred versus when Lehman, you go out 5 to 6 months and you drop Bitcoin down about 45%, which puts us give or take around that $10,000 level. And that might give us a basis to kind of get involved as a long investor. And I think, again, you're going to see this coincide perfectly with that regulation being unveiled. It's going to be, what's exciting for me is that, to me, I finally see the end of the bear market. Doesn't mean we're going to roar back to all-time highs, but at least it's getting closer. I generally assume it was more the retail crowd. I did read that I think November there was the most investors ever bought into Bitcoin that owned less than one Bitcoin. So basically it was the small investor buying in, which number one, it tells me it's not quite the bottom yet, right? Generally, that's not the way bottoms work. It's usually the smaller investors are the ones freaking out while the whales accumulate. But I do think that you will get to a point when you get towards that 10,000 level-ish, give or take, where big money starts to say, all right, listen, what's my risk reward here? Do I think that Bitcoin's going to survive? How much is it down? Are we going to eventually get common sense regulation that clarifies where this thing can potentially go in the future? And I do think the digital gold is where it's going to be at for Bitcoin. Now, the security side, meaning the alts and how they're classified, that's a little grayer, right? Because we don't know, is it going to be like the same sort of regulation that stocks have to abide by, which doesn't really make sense? Or will there be a new set of ground rules for these alts that they have to do reporting and auditing and different things like that? And I hope it's a positive thing. It's one of those things that, again, there's a little bit of angst in me to see what that's going to be. Now, the worst case scenario for me, and I have some trend lines down here, but basically that level, and I'll show you a case here, that's this area going back to the early 2020 period. In fact, that was the high just before the COVID dip, which then kicked off the mega run on Bitcoin. So I just kind of picked like my worst case scenario there to go into that. I actually have been accumulating Tesla in this range because I think it's due for a technical bounce. I think that yes, ultimately it goes lower if we go into a really bad recession, but any stock that drops, again, especially a good quality name, from $200 in early December, and here we are 3 weeks later, it's touching basically 125. That's due for a technical bounce. We have a lot of support right here around 120 as well, which we kind of kissed today. So, I think in the near term, you look for a snapback, maybe as high as 167. But again, I would still think that this is long-term overvalued. Elon Musk has to get his stuff figured out with Twitter. I mean, there's no doubt that that's been the major negative that has driven Tesla investors to kind of tear out their hair. They want his focus back on Tesla, no doubt about it. I mean, for me, right, it's going back to when it was trading at its all-time highs and trying to figure out why the valuation was so high. And everyone was telling me, well, it's not just a car company, right? Because if it's a car company, then you're right. It probably has to drop another 50% at minimum. But the question is, and I think this is the issue for investors, is that with Elon Musk's focus on Twitter, then this really is just a car company. They need his kind of inventive nature to get the other sides of this business going to give it that extra valuation.